Imagine betting against an entire country, not a stock, not a company, a whole currency. That is what George Soros did in 1992. He quietly prepared to short the British pound and won more than $1 billion in a single day. The world thought the pound was safe. Governments promised support. Banks raised interest rates. Headlines screamed confidence. But Soros saw something else. Weakness beneath the words. He saw pressure. He saw an idea the market could not hold dot. He pulled the trigger. The Bank of England fought back. They raised rates twice in one day. But it wasn't enough. The pound collapsed, and Soros walked away legend. The real question is this. What did he see that the whole world missed? Stay with me. The answer will change how you think about risk. In the early 1990s, Britain was in the European exchange rate mechanism, a system that forced currencies to stay inside fixed bands. The government promised to defend the pound if it slipped. On paper, that should have made the pound stable. But on the ground, things looked different. The economy was weak. Interest rates were high. People were nervous. Soros didn't rush in. He watched. He noticed small signs, money leaving UK assets, traders nervous about interest rates, and government actions that felt like temporary fixes. He began to build a position quietly, not all at once, but step by step. He sold pounds short layer by layer. When the pressure built, other traders followed. On September 16, 1992, the pressure broke. The Bank of England could not hold the pound. Soros's position turned into a massive profit dot. The lesson isn't just that he was right. It's how he saw risk before it became obvious. He used real facts, patient observation, and step-by-step action. For Forex traders today, watch the story behind the price, policy, flows, and human reaction. Don't trade a number. Trade the idea behind the number. The headlines celebrate the profit. But Soros himself said something more honest. I'm only rich because I know when I'm wrong. His billion-dollar win came from conviction, yes, but also from a rule. When the market proves him wrong, he exits quickly. He cuts losses. He changes his mind. That means two traders can hold the same analysis. One will profit, the other will fail, not because of better data, but because of how they handle being wrong. Fear makes you hold on. Pride makes you double down. Soros understood that truth and used it to survive and thrive. So here's the challenge for you. Build conviction, but plan for being wrong. Make rules for exits before you enter. Test your ideas in small steps. Size your risk so one trade cannot break you. The market is not a war to win every day. It is a test of your rules, your patience, and your humility. If Soros' story changed the way you see risk, hit like and subscribe. Turn on the bell. Next week, we study a trader who protected his capital when the world panicked. Comment below. What rule will you use to cut losses quickly? Share one promise to your future trading self. This is Forex Legends. Learn the past, trade the present, master your future.